Hello guys and welcome to Mali Traders. This is Jojo and today we're going to be going through a revision of what happened last week in the market. So this is our usual weekly analysis where we go over the chart prior to the upcoming week. Okay, so we can talk a little bit about how we traded last week and how we propose or how we anticipate that the trading is going to go this week. Every week, what we do, our routine, for those trading with me and for those of my crew members and for anyone, the way we trade these days, every week and during the week, we update our levels from the monthly, weekly, and the daily, and sometimes the 4-hour, depending on, okay? The idea is to mark out liquidity areas. We mark out our higher time frame draw, okay, and then we mark out the daily liquidity and our volume and gap imbalances where price is going to draw to. Remember guys, price is only looking for two things: taking out the highs and the lows, or filling the gaps. There are different variants. Here is a gap. This is what we will call a volume imbalance gap. Okay, this is a BC, right? Buy side imbalance, sell side inefficiency. In other words, an fair value gap. Okay, FVG, fair value gap. I think everybody who's studying or who's using ICT and SMC concept understand this right now by this time. Okay, so these are the things, or rather the main things that we look for. So if we were to look for a trade short now, we will be thinking about these areas. Prior to this was the draw because of this low, and potentially because of some other things that you might find in this zone. All right, so if you pull from here, just an example, so you already see that this zone has your OT in here. Okay, so this is your first guess. By the time you do this enough, like many times, you already start seeing where your OT is, even without pulling or doing much. You can just anticipate where it is. So this is your OT, and if you're trading retail, that would be the area where you have your golden pocket. Okay, for those of you doing what is it called, retail, so you have your golden pocket area there. So at this area you already anticipate a reversal. So that's just a basic way of analyzing it. So you just wait for price to tap into your higher time frame point of interest. So this is your point of interest. Sometimes in my charts you will see me or any of my students use something like this, TB. Basically just means trading box. Okay, we know, okay, this is the area we want to take trade from, or we're anticipating a trade from. Okay, so you have your daily sell side liquidity here, that would have been here. So I'm just going to give a live example of how this trade would have played out. It tapped into it here, so we're going to try to use this, or we can use this, it doesn't really matter. So this would be your, in this case, your weekly. So you would have had something like this. Okay, this is for newcomers. If you don't know, this is why we take levels. So levels, this is what I mean, we'll go through it in a moment. So you see, we take these things. It might look a little bit right now like, oh shit, I cannot understand anything, or it's just too messy. Let me just try to pull up everything here on my chart, on my levels. So you're like, oh shit, no, that is just too much, right? Yes, but they are for different things, and you don't open all of them at the same time. These days, personally, I can trade a whole day without really pulling up my levels. Okay, I might just take one. So let's go back to our analysis. So price tap into your sell side like this. Don't forget guys, macro time frame is bullish. Okay, remember your OF is bullish. It doesn't matter if we are not pulling this, we are not doing trend line liquidity. We don't really trade trend line liquidity here. Okay, this is just to illustrate to you that overall the trend is bullish. This is a weekly, that is why it's blue. So we have a template for this called OF. Order flow is bullish. Now, regardless of it breaking it lower, you still want to see higher lows on the weekly time frame. Okay, as this breaks this one with I'm gonna move this just so I have a clearer chart. As we break this weekly candle here with displacement, that is a swing low. So we come in here and then this week closes bearishly. So perhaps this move is going to continue lower. That is not a full, that is not, for me, that is not a reason to say, oh, it's absolutely going to go lower now. But let's see what we can find here. So on the daily time frame, we are watching this candle come. So on this day, which was 18th of August, a few days ago, we tapped into it down. Now, when you have a swing low, when you have a higher time frame point of interest like this, a higher time frame levels like this, when you have this, don't just focus on this alone. Think about what else do you have below. What else do you have below? What other PDs do you have below? If you look here, you will see that you have an order block. You don't have a fair value gap. No weekly fair value gap. No weekly fair value gap, and no daily fair value gap. So the only thing you have here is an order block. All right. So, and you have here, you have this consequent encroachment of this. I don't have to pull out all the PDAs. The idea is for you to check what else you have below in that in the proximity of this one, of this major. Okay, because this is your weekly. All right. So now that you have that, you have your order block, and then you can go to the 8 hours. We don't really use the 8 hours. It doesn't really matter much. But if you go to the 8 hours here, you can see here you have a low, a high, a low, and then a break of that, and then you have this is the highest up close candle. So here and here you have a breaker. So you can elect, by elect I mean you can choose to put that up to, and then you just call it. So this is how you do an analysis, top-down analysis. This is basically what I'm teaching you guys right here right now. So you call this a breaker, and for you to know what type of breaker it is, you just go back there, go to your settings, come in here, breaker 8H. Simple stuff, right? 8-hour breaker. Just like that. You know, okay, you got this on the 8-hour time frame. Remember, a breaker, it needs to take out the low, and then it goes up, and then it comes back. So it is this highest up close candle that you're going to be calling. It's a lower high, a lower low, and then a break of that high, and then you put this one out, and then you're going to see a retouch of it if it comes. So right now you have a breaker below, a breaker and a daily order block. Okay, this order block is daily. So here we just call it OB. Where is it? So it's just an OB, but remember it's a daily. I'm just going to turn this to the right daily color. Purple is our daily color. Okay, so that is daily order block and 8-hour breaker. Now, like I said, I don't really use the 8 hours so much, but we're just doing this analysis for the sake of that. Okay, and again, this one right here is also an order block. So, but you don't have to focus so much on everything. So you just go back again. Then we use the 4 hours a lot. So if you were using the 4 hour, this will still be your breaker. So you can as well still call this your breaker, 4 hour of breaker. Okay, so it's a low, a high, a low, a low. So this could as well be your breaker right here. So it doesn't matter whether you call it 8 hour or 4 hour, but because we use the 4 hour most of the time, you can just call it 4 hour. So now you know you have this below. Okay, so what do? You come to the 1 hour. For those of you who have multiple, who have a premium or something, you can have this on a 6 layout. So you can have the daily. We trade like this. We have the daily, the 4 hour, and the 1 hour. Those are our main time frame that we use to analyze where, you know, it is that we use to analyze price. And then we go down 15, 5, 1. So those are our 6 main time frames that I use personally to analyze my entry. So as price comes here, I will go to my 1 hour time frame. I'm watching what price is doing. Now I'm using a naked chart, no indicator, no nothing. I have crazy fancy indicators, but that is not the point. So I'm seeing what is happening here. Price broke this down with displacement. It came in here, but it didn't touch my other PDAs here. Okay, this is my priority PDA. This is where my priority goes to. Okay, so these are my secondary PDAs that I'm looking for it to hold. So that is stacking for me, right? So now if I want, I can go to the 30 minutes and see, okay, what's happening, where nothing much is happening. All I see, price seems to be falling back from this point. So now I go to the 15 minutes, which is my bellwether, and then I'm seeing this sort of consolidation. At this point, I'm not really sure which. Okay, this is New York, exactly, guys. This is equity open. So the market just opened. London has been selling, and New York just came into the party, and then they just like, okay, what are we going to do? When there has been so much selling prior to the equity open at 9:30, the market is likely going to trade back to opposing liquidity. What do I mean by opposing liquidity? Liquidity on the opposing side. So it favors you to look for your long here, to look for your trade here at this particular time, 9:30 open. 8:30 and 9:30 open. So around 8:30, where's 8:30? 8:30 open initial, which I call the initial opening. There was not much happening. Okay, so let's go to the 5 minutes. It's going to be a lot clearer. So this is what happens. This is 8:30 open right here. I'm just going to use this vertical line to denote your 8:30 open. So this is your 8:30 opening. It came and then it stalled. All right, it just consolidated and then it was going up. No, by 9:30 open, this liquidity is going to be purged. So by the time you see the 9:30 open purge the liquidity, purge 8:30's liquidity, expect the opposing liquidities here to be tagged. So that is what is going to likely happen going into the PM session. So you just use this to analyze your chart. This one where your backup plan, okay? This is where your plan B, where it's going to fall back to if all hell goes down. Remember, this was your daily order block and this was your 8 and 4 hour breaker. So your weekly level held. This is your macro higher time frame level. So it held price. Your breaker didn't, price didn't have to go there. So when it's 9:30 open, price went up, shut up, and then traded into the OT zone here. Okay, and then price went up. So let's zoom in and check this out properly. So as this is happening, this is what you would do. you mark out the PDAs. This is your 15 minutes PDA, that is your order block. Okay, so you do is just tell yourself, okay, now I have my order block there. Is this OB gonna hold price? It's holding price here. It's holding price here. So price keep doing this, just keep chopping into these points. All right, you kept chopping and chopping into it, and then it went off you go. So at this point you could have entered somewhere in here. Your order block is inside your OT, so you have your lower time frame 2 entry PDAs. Your lower time frame PDAs, use it for your entry. That's what I mean. So if you pull it from here to here, you have your OT. Like I said, you have your OT inside your order block. All right, that is all you needed for that money trade. So here you got your OT. So I'm going to delete this for cleaner chart. So you have your order block right there. This one, this lower candle is your order block, and you have your OT and 9:30 open, traded into it. So you would have entered inside this OT and your stop loss here. Why would your stop loss be here? Why didn't you put it all the way down here? No, because it's equity open. Price is going to tag these ones, and then you went, I don't know, you can measure it yourself. I don't know how far it went, I can see it from here, but hey guys, this is 164 pips. So if you were taking it only within the first 2 hours, you got 130, 126, approximately 130 pips, thereabout. That's it. So what happened here? Now I'm going to show you another trick. What happened here happened here. Check this out. Again, you got your OT. You see the same move replicated here, exact same move. You got your order block right here, and then you got your OT right here, and then you got this tapping back into your order block, OT. So this is two PDAs, two things doing the same thing right there, back to back. But you probably wouldn't have known this trade was here because you didn't have an analysis, you didn't have a bias, and you didn't have a narrative. So if you don't know what bias and narrative is, you don't understand how to examine them, or rather analyze them on a lower time frame, you have to go back to my older video to watch that. And if you're new and you don't understand how this concept works, come to our Discord and watch the students mentorship video. There is for free. Everything we do is for free. The mentorship is over, but the videos and the tutoring is still going on. All questions are answered. So the students that have learned this thing, they can easily answer your questions. And now I'm just chilling, watching what they do. So this is how you could have analyzed that. Now I just chose the first pair on my list here, which was ES. The same thing, the same principle applies to every other pair, every other ticker that we trade. So it's the same principle. Now this is just one entry model. It's one of the simpler entry model. Now this I just showed you. Oh, by the way, this is a return to PDA. Okay, so your PDA now that was broken, it's not using it as a retest. So see here it had, here it had. I wonder if it was still holding in the future. I don't know. You can check it out yourself. So this same principle, I use it in another entry analysis called OT to OT, where I analyze two OT. Sometimes they breach, and then in between them 50% of that is a perfect entry. It's just something I've been working, I've been back testing and live testing for a few months now, and the accuracy is just crazy. So there's a lot of entry, a lot of things that you can look at, but do not let a lot of all these entry models or my analysis get you off guard. You don't need everything. Okay, choose a few and then use it. This is one of the simpler ones, and this is I know somebody who's just making like extreme crazy figures just using these simple techniques. Pay attention to the time. Pay attention to the time and price. Where is price at a specific time? Okay, so now I'm going to close this, and I'm going to, let me see if my so as you can see, this was London close OT, LOC. London, it means London close. All right, so this is all New York open here, and this was the where is it? Here was the 8:30. This was the 8:30 open. So this was London close OT. All right. Sorry, yeah, London close OT, and to me, London close OT, New York 9:30 OT is the same. So around this time, look for OTE, optimum trade entry, and you will find it. Usually, you will find it. So here is London. I'm just gonna turn off the magnet so you can I can do this properly. So the way you do this is you pull it from the swing high to the swing low. Price will trade above or below the 50% of that into these three spots right here. Okay, so above 50%. Yeah, you can already see that it's above 50%, of course. But let me just, for argument's sake, I'm just going to use this down box so you can see price will trade above that into the OT. So in each session you will usually have an OT. This was the London open OT, or London session OT. It don't price all the way down. So you could take it from here all the way down and use a New York session OT all the way up. So you ping pong, you trampoline yourself using your OT. So OT to OT entry. Okay. So that is for the session. I don't have, let me see if we had other things here now. Okay, so I'm going to go forward. So this is more recent, and of course you can see how the CBDRO levels are holding crazy. All right, it's a step down and holding within the Asian session consolidation, and then price dump. It head here like crazy. Yeah, this is what I meant. You see, the level was still holding here. So if you look in here, price came back, tapped into it. Remember, this was the level you'll be trading from. It tapped into it inside London, inside New York key zone. Still near, yeah, basically the same. In my head, I don't want to complicate things. I see this entire key zone as one. London, New York close. To me, I see it as one, but this from here to here is New York key zone, okay? And then London close key zone start is the yellow one, all right? So it has the time is depicted here in this my ICT indicator, session indicator here. So in In the case of this one, it's a little bit tricky because the 930 and New York 930 and 830 seems to be around the same place. So anyway, I'm not going to touch on that. It's just about uh, where to buy from. If you buy from 830 and 930, it's a little bit complicated the way ICT taught it, but the way I have understood it and the way I have live tested it is a little bit different, but that will be a video for another day. So if I go to the 1 minute time frame, so price touches it, or rather touched your level back, and then it took off from here. Okay, it's a low, high, lower, low. So you can already see your breaker here on the 1 minute time frame. So yeah, you see, you find everything you need in all time frame. It is fractal, guys. It is fractal. Don't let the people, social media, fool you and then they confuse you with their profit. Yes, some of these traders are extremely good. They are really good, but you can be better. Tell yourself that. Wake up every morning, go to your chart. Even if you make 10 mistakes back to back, you'll tell yourself, okay, this is another bad day. I'm taking a walk out. You know, if you have a dog, go for a walk with your dog. Go punch something. Go watch TV. You know, free your head. Tell yourself, okay, tomorrow is another day. I'm going to keep doing this until I get better. All right? Don't let any progress out there on social media fool you. Anyway, so here is your 1 minute breaker. Let me turn this off. So here is your 1 minute breaker right there. It's a low, a high, a low, a low. A low, a high, a low, a low, a break of it, and then a retest. So here is your unicorn entry right there, guys. And now we are close, but almost at the OT, almost. So if you also pull your OT and you tell yourself, okay, I got my OT, that's your backup, right? So you tell yourself that you got an OT right there. Right there. And then here you got your order block. Remember how we started this analysis, guys? The same principle you are using you are applying again here. Here you have your OB. Okay, guys, like this, and then off you go. I don't know how many pips that is. You can measure it yourself. What time was this? So this was your PM stuff. So what macro was this, by the way? What macro was this? Hold on a second, I'm just going to okay, New York pre-launch macro, of course. This pre-launch macro will usually target the buy side liquidity, opposing liquidity. But for you to get this right, how this macro works, you need to know the narrative. This doesn't tell you the narrative. If you understand what narrative is, then you could have gotten this right easily. Okay. So yeah, anyway, I'm just gonna close that. I don't like putting it on. Where is it? So this is a particular macro that's pulled price upward to attack this buy side. So before launch the price dumped, and during launch, and or rather after launch, and then price just went up and attacked this. Did it take it out? It did take it out, of course. Yeah, it took it out. That is why this is this swing high stopped up here. So yeah, even if it didn't take it out, it's not a big deal. It's just, to me, it's just a draw. Okay, so you use it as such. And as you can see, all the other this line, this fair value gap, this is a extended silver bullet. Okay, so these are the silver bullet hour. This green, or rather light green, these are the silver bullet hour. I'm sorry. That is for that. So that is how you should have taken that trade. And if you just focus on ES alone on that particular day, you know how much you would have gotten. And if you knew this and just analyzed, this was enough for you to pass your first, I don't know how this what is it called, funded thing works, but I have an idea. So this is enough for you to pass your first challenge if you want to go a little bit aggressive. Okay, so guys, that is how this trade went, and the same principle was applied to all this one. So I'm just going to choose this is I was looking at this yesterday, or no, this morning actually. There was a trade one of my veteran student posted. I'm not sure where she posted it. It was just a gold long. I think it was a long. I'm not sure. Was it a long? Guys, anybody here can did anybody take that trade? I don't know. Clover posted it somewhere or something, and it was a good catch. I probably wouldn't have seen it myself, but when it's I don't know, it was a gold using the 5 minutes time frame. Hey guys, this thing came out, so I'll just watch the record later. Alright Paul, you can watch it later. So I think I'm going to stop this particular video right now, and if you are new, you can check out our Discord. Come check out our Discord, actually. That is where the magic happens. Okay, and speaking of which, unicorn entry on the 5 minutes. Yeah, it was a unicorn entry. Yeah, it was a unicorn entry on the 5 minutes on gold, but I don't want to waste time scrolling and looking for it right now. But basically, the same principle I've just used for the ES and the other analysis is what they use. Is what she used. Okay. And yeah, so I'm going to stop this particular video right now, and then I'm going to make more analysis. All right guys, subscribe. How do you say? I don't give a shit. Subscribe if you want. Have a nice day guys.